Assalamu alaikum guys. My name is Esha and I am pursuing Masters in Islamic Finance Practice. Today we will be discussing issues in the accounting of Ijarah, a comparison between IFRS and AAOIFI. Ijarah literally means to give something on rent. It is referred to as Islamic lease. It is a contract where one party transfers the usufruct of an item to another party for a specified period in exchange for a specified consideration. Unlike in conventional lease, the lessor retains the ownership of the Ijarah asset while transferring the right to use the asset to the other party. So with Ijarah, since the ownership is with the financial institution, so all the liabilities and risks are borne by the financial institution, including impairment and damages to the asset, provided that they were not caused because of negligence or misconduct of the user, the lessee. Now coming to the accounting of Ijarah, the two standards under discussion today are IFRS 16 leases and FAS 8. IFRS creates a common accounting language so that businesses and their financial statements can be consistent and reliable from company to company and country to country. The relevant standard for Ijarah is the IFRS 16 leases, which has recently replaced IAS 17. Since IFRS is not based on Sharia principles, the AAOIFI, headquartered in Bahrain, was established. AAOIFI issues the FAS, Financial Accounting Standards, which are based on Sharia. Despite being Sharia based, only 6 countries follow under the pure AAOIFI regime. The relevant standard in AAOIFI is FAS 8, Ijarah. For clarity and ease, in this video, I will be using AAOIFI and FAS 8 interchangeably. Under AAOIFI, asset is recorded under fixed assets at historical cost at the time of the inception of lease. In IFRS, asset is recorded as receivables by assigning the value of net investment, value of asset plus all costs, which are incurred when you make the asset available for use. Secondly, in AAOIFI, the rental revenue should be recognized over Ijarah term proportionately, while under IFRS, the amount received is allocated between principal and finance income, interest. In AAOIFI, the depreciation is charged by the IFI, while in IFRS, depreciation is charged by the lessee. And under AAOIFI regimes, whenever there is any expenses such as takaful or road tax or provisions for repairing and taxes, they all are charged under the IFI. But in the IFRS, since the IFI is not liable for any repair and maintenance, the IFI does not record it. The difference between IFRS and AAOIFI. The first basic difference occurs from the fact that IFRS has a substance over form assumption. Therefore, ownership is transferred to the lessee, asset is converted into receivables, and the IFI does not record any repair and maintenance cost. It does not record depreciation, and no mechanism of disposing of asset is needed. AAOIFI, on the other hand, has a more Sharia-oriented approach which translates into a form over substance assumption. So the lessor retains the ownership, the asset is recorded under fixed assets, the IFI records impairment and repairs and other expenses like the kafir and road tax. The IFI records the depreciation of asset, and the IFI is even responsible for recording and disposing if required. Secondly, we move on to the time value of money, interest. So under IFRS, interest rate is calculated by discounting the receivables as per ongoing market interest rates, and the rental received is recorded under the finance income. While in AAOIFI regime, rentals are calculated as per the fair value of the asset and the prevalent trend in the market. And when the rentals are received, it is recorded under rental income. So you can see this example. Under the AAOIFI regime, the asset is owned by the IFI in line with the spirit of the Sharia. It is recorded at cost and depreciated over the life of asset, and provisions are also made for impairments. Whereas in this example, you can see that under IFRS regime, the Ijarah asset is recorded under financing and receivables, which shows that the IFI does not treat it as its own asset. Issues in practice. So since IFRS has standards for different scenarios and is developed to cater to different situations, they are more profound, therefore adopted by more than 120 countries across the globe, including Malaysia. However, the stark contrast between Sharia objectives and the accounting assumptions like substance over form and time value of money cause major hindrance in recording Islamic financial products, including Ijarah transactions under the IFRS. The reporting objectives of IFI and conventional financial institutions are very different. Therefore, it is important to opt for a standard that is in line with their objectives and is Sharia compliant. The issue arises when Islamic contracts try to apply IFRS as per se. IOFI tries to solve this issue by being Sharia compliant. However, because of a lot of gap and a lot of customization space that IOFI standards have, creates some confusion, which may always not result in good practices. So the IFRS standards cannot be changed as per the mode of financing. But we can always make it IOFI more comprehensive and put in efforts to make it a very globally acceptable standard for all Islamic finance institutions throughout the world. My recommendation again at the end would be that IOFI will have to develop standards by using IFRS as a base probably. This will help in developing profound standards while recording as per the Sharia requirements. Also, this will help IFIs in converging to similar accounting standards while abiding to the Sharia. Jazakallah khair. Hope you found this video helpful. Thank you.